Welcome back. So lots of numbers to go over. We have Siddhartha Khemka to help us out a little bit. Siddhartha, morning. Let's start with the banks first. Bandhan and Federal. Bandhan obviously is not too great. Federal, what do you think about these tier 2 lenders?
Yeah, good morning. Lot of numbers. Yes, I think federal earnings overall look weaker compared to what some of the other larger banks had reported. I think there has been increasing competition, especially in the retail MSE, especially for the deposits in the industry, and that is kind of impacting the overall business. Going forward, I think the bank expects the CI ratio to be stable at around 52, 53 over the next few quarters. Loan growth should be better than what we are looking at currently, and I think the management is trying to improve that, as well as the asset quality. I think continues to remain pretty strong. Net, I would say pretty mixed set of numbers, operationally in line, but increasing competition for deposits, as well as the challenge in terms of the loan growth. That could put some pressure on Federal. Bandhan, good set of numbers. But I think overall, the challenge remains to be seen in terms of how the microfinance business that improves, and we have seen that the operationally it has been in line. Earnings have been missed largely due to the lower other income, higher provisions. Margins have declined by 21 basis points on a Q-on-Q basis. I think the challenge will continue to remain in the near term as it tries to stabilize the microfinance business. That is a significant stress book that continues to put pressure. And I think again, between the two, we would be still neutral on Bandhan while we remain positive on Federal.
Okay, all right. Hi, Sid. Good morning. Good to see you in. What about Eternal? What's your take on the numbers? You know, for the industry, the street was working with big scope of growth. Profitability is not coming about. That could worry investors, right? What is your take?
Good morning, Nigel. Yes, good to be on the show with you. I think it's a catch-22 situation for a company like Eternal. On the one side, you have a very strong growth potential. However, the same is not getting reflected in the margins. A few quarters back, we saw the overall business doing pretty good. But now with increasing competition and with the capex being upfronted, I think margins will remain under pressure for the next 2 quarters, and that is where the challenge remains. That so if you see even for Q1 of FY26, we are expecting revenue to grow about 63%, but EBITDA would likely decline by about 14%. And someone who is looking at near term, I think the stock could remain under pressure. But what we like is that the long-term growth potential, both in the food delivery business as well as in Blinkit, we believe that if Blinkit, the company stops the capex right away, the adjusted margins could again improve to 3 to 4%, what they have been guiding for. But I think that will see most probably in FY27. In the interim, we remain positive. We believe any correction below 200 could be a good opportunity for long-term investors to buy to the stock. We continue to remain positive. And I said, we have a buy rating, and we have set a target price of 260, which remains unchanged post this quarter, because this quarter the earnings pressure was already factored into the estimates.
Right. Absolutely. Actually, at a net level, we had those Jeffries estimates. The actual net numbers are a little better than what was actually. But I mean, there's a lot of moving parts there, as you said. Indus Tower said, any thoughts? There's no dividend, but there's a committee which has been constituted to consider how to kind of return cash to shareholders. But the expectation was the 25-30 rupee dividend in the quarter, which has not come. What's your sense?
Yeah, definitely, Prashant. I think while the operational numbers are in line, the overall reported financials were impacted by several one-offs, including the tower purchases from Bharti Airtel in the prior period revenue, some provision reversals, and all those things. What clearly is that the Indus decision to defer dividend payments is negative so far as sentiments are concerned. Because if you see, this business is mostly a dividend play rather than a growth play. Already the lot of capex has been done, including Bharti Airtel, where the pan India 5G as well as the rural rollout has been done. So going forward, we do not expect any more tower additions, and hence the growth on that front will remain kind of muted. There is downside risk to the tenancy additions, as we see that there could be delays from Vodafone Idea's payment because of their inability to raise debt, and in terms of capex spend going forward. So overall, I think it's a dividend play, and if the dividend is not coming forth, it's a negative sentiment. What we believe is that we have a neutral rating, and we see that risk reward remains fairly balanced with a target price of around 400, which is closer to the current odd levels.
Let's actually talk about some of these defense stocks. We'll be speaking to Paras Defense in just a short while from now, but they've made a huge comeback right now, whether it's sentiment, some of it is probably earnings as well. But tell us about Paras, if you have a specific take, if there's anything you'd like us to ask the management. Otherwise, what else from this entire bouquet? What are you liking?
Yeah, so unfortunately, we don't cover Paras, but what we do cover are two market leaders, Bharat Electronics and HAL. So HAL is something that we recently initiated coverage. What we see is that these two players are market leaders in their respective space, in the electronics as well as in the aerospace defense. As you rightly said, defense has made a strong comeback. Earnings continue to be pretty strong. What we saw earlier was that valuations had gone to a premium level and they had corrected. And Q4, we saw not only a bulk of strong order inflows, execution was pretty strong, but the global geopolitical situation brought the focus back on the defense space, and that led to, again, I think market looking at it from a positive view. That led to, again, strong re-rating. So what we, again, as I said, market leaders like Mazagon Dock, Bharat Electronics, Hindustan Aeronautics, we believe that this space of defense will continue to see strong growth for the next few years. It's a decadal story, and with India being at the center of, if you see globally also, being a neutral party, we have a lot of exports potential apart from the domestic market standpoint.
Okay, all right. Final question, Sid. Before we let you go, I wanted to ask you about my metal boys. JSPL's adjusted numbers actually were good. Vedanta at around 400, 420 rupees. Actually, that special situation makes it quite attractive. What the promoter does next, we don't know. And what Mr. Trump as well will do, we don't know. And NMDC has hiked prices. So among these three, do you like anyone?
Definitely. I think the entire metal pack, we like JSPL strong numbers. If you just switch to Vedanta, I think performance came in line with expectations. Capex plans are progressing well. I think the management remains firm on its deleveraging plan going forward with higher cash flows, which would support the expansion plan as well as deleveraging efforts. Valuations are decent. We like the stock. Even JSPL, for that matter, I think pretty good set of numbers above our expectations. The completion of the ongoing Angul expansion, I think the crude steel capacity will rise by 65%. That's a good, strong new capacity addition. And again, the companies reduced its debt significantly, coming down to 1.26x at the end of Q4. And going forward, again, the deleveraging plan continues. So we like the stock. We have a target price of 1050 there. NMDC, pretty strong Q3 numbers. Volume growth muted. Realization, I think now with the price hike taken, that will again start kicking in terms of growth going forward. But in all the three, the preference would be JSPL, followed by Vedanta, and finally NMDC.
Okay. All right, Siddhartha. Thanks very much for all of that perspective and all the stocks that we've discussed.